The picture looking green in most areas of this market. Let's bring in Professor Jeremy Siegel of the Wharton School. Professor, it's good to have you. Your reaction to the events of today through the prism of geopolitics and what it could mean for this market.
Extraordinary. All I can say. Now, I think Europe was closed, but I think futures were open and they went down. I mean, I think a lot of the rally that we had seen over the past month and a half in Europe was partly because of hopes of peace. And I mean, that's looking further away, certainly, as a result of what we saw there. I mean, as far as impact on the U.S. market, I mean, you know, previous show you've had some discussion on oil. It's really hard to tell how that will play out. I think Europe is going to be the main impact of this break between Zelensky and Trump.
What's your general sense about where this market is? Obviously, volatility has picked up recently. There are concerns over a slowdown in the economy, and certain areas and factors within this market have been quite upset lately.
Yeah. Well, it was interesting. And I was watching 8:30, and everyone was watching the PCE deflator. I get all the data on my screen, and all of a sudden, that trade deficit came out. And I couldn't believe it. In fact, I thought it was a misprint. I mean, that's not only the biggest we've ever had in history, the change from the previous month was more than twice as great as any change we've ever had in the last 75 years. And I said, that's going to blow out GDP for the first quarter. Now, you know, first of all, I'm not agreeing with, I think the trouble with the Atlanta Fed, I mean, it comes out quick, but there's a lot of offsets to that. But almost every analyst is now down in the 1 range for GDP this first quarter, which would be the slowest in 2.5 years, which would be below the Fed target and much lower than we thought in early January. So, I mean, this is now, you know, a lot of what we, you know, trade deficit subtracts from GDP in the accounting. Now, a lot of that's going into inventory. So once we get all the inventory data, some of that is going to come back. But listen, we've seen slowing on everything. Retail sales were not good in January. Jobless claims jumped above 240. Housing starts were not good. Home sales were not good. There's definitely a slowdown. I mean, honestly, that's much more important, I think, to the market than really what happened to Zelensky today.
Are you less bullish as a result?
Well, you know, I came on CNBC January 2nd before the markets open. I said I thought we could get a correction this year, and that this year was going to be probably a gain, but really modest, more modest. And I see that, you know, playing out at this particular point. You know, there's a lot of challenges. I mean, a lot of people, for instance, thought that the House vote that, you know, is going to start the process was, you know, the victory for the Trump tax cuts. It is not. It's not enough. I mean, that budget, to my understanding, at least is not enough even to extend for 7 years the Trump tax cuts that they're going to expire in 10 months. Not even counting for what Trump, you know, wants to further tax cut after that. I mean, it's a blueprint, but it's not enough. So, I mean, there's an awful lot of negotiations going on. You know, I mean, you know, I would, you know, I think that's the most important thing, is to get those tax cuts permanent, or at least another 7 years, because with the margin, listen, you can't wait. The margin in the House is just too small, and that's what I would concentrate on the current time. And I think the market now is now. And then on top of that, of course, there's tariffs, and there's no question that sentiment declines are related to tariffs. So I mean, look at the trade deficit, the sentiment declines. People say, oh, you know, let's wait. Trump might not put any of these on, so, you know, it's not going to have the effect that you think. It's already had an effect. I mean, a tangible effect. We would not have had the super record trade deficit that we had, we would not have had the sentiment declines that we had. They all mentioned in that. And we don't want to know what's going to happen in 4 days or in a month and 4 days and what kind of tariffs and why should there be more tariffs on Mexico and Canada than China, where at least we got some bipartisan support that there should be tariffs there. We don't know where we're going in that direction. He has to nail. He's trying to do too much, in my opinion, Trump. I mean, he's trying to do good things, but too much. And, we don't want all this to fall apart because there's a lot of good things that need to be done.